This is the Friday, February 16th, 2018 version of the Market Plus segment. Joining us now, Mark Gold. Hi, Mark.
Nice to be back, Paul.
So you've been on the road this winter like you are, the speaking circuit. What are people telling you as you go from city to city? Does it matter if you're in Wisconsin or in the South? Are they telling you different things? What are their big questions?
Well, certainly, when are things going to get better in the farm economy? And we've had at least 2 years of tough times out here. And I believe that this year is going to be a little bit different. We've started out well. I think that's a good sign. But certainly on the minds, what happens if we have big crops? One of the analysts came out a week ago and said if we have an average bean crop, we're looking at a 675 million carryout. That was before we added the 60 million onto the last supply and demand report. So can we go over 700 million on a carryout? If we do this year, this rally in the bean market has to be taken advantage of. I don't quite believe it, but I still think that there is a lot of risk out here and that you can't get complacent because we've started the year off well.
So do you get concerned, though, that our marketing plans, for some of them here, at least in the United States, we're hoping for a weather situation to impact us? Well,
that's certainly the case. It seems like 8 or 9 out of 10 farmers' marketing plan is to hope for higher prices, whether it's due to weather or something else.
Because somebody's having a disaster. You're
right.
going to profit from someone's loss.
Right. And this year it's Argentina pushing prices up, and that's fine. But we still have to look at our carryouts, not only here in the U.S., but around the world. It's not like we're running out of grain anytime soon. Somebody's been caught short in this meal market, as we've discussed. Once that's over, or if they get some rains in Argentina, this thing can go right back down. So we've certainly gotten a little bit more aggressive up here, selling about 20% of our beans, new crop beans up here, starting to finish up some old crop sales. But we're certainly looking at buying some puts. You can buy a $10 November bean put out there today for 44, 45 cents. To protect you. If you don't want to spend 45 cents to go all the way out to October, you can buy a short-dated option and save 10 or 12 cents. There are plenty of things you can do out here proactively. I've always said we get that one opportunity to sell grain at profitable levels. This is an opportunity right now. People don't want to take advantage of it because it's so early in the year, and particularly with the dryness that we're seeing in the southern plains and maybe moving north. But you need to be doing something here.
Well, does it give you pause, since it is so early in the year, for many of these contracts?
It doesn't give me pause to start making sales.
Okay.
When the market rallies, and we've had a good 70-cent rally in the beans, 50, 60-cent rally in the wheat, 25-cent rally in the corn, we want to reward the market. Now, we're not doing as much in the corn because it hasn't rewarded us enough. And the corn's been kind of the follower and the lagger behind the wheat in the beans for the moment. And the funds have virtually come out of their shorts. They're only short 10,000 contracts now. They've gone from 200 plus short to 10 or 20 short, and it's only moving the market 25 cents here. So I think that tells you that there's still a lot of corn in farmer hands from the 17 crop, and that's kind of keeping a Damocles sword over this market.
Well, corn, as we called it, the tag-along or the little brother or whatever you want to call it, pulling it along. All right, real quick, advice. If I have 75% of my old crop right now, what should I try to get to here in the next couple of weeks? Should I try to get down to 25% or 50% of what's left in my bins?
I would say you want to stretch it to 30 to 40% between now and the March 31st intentions report. And then the day before that, whatever you haven't got sold, particularly if we're still on this rally, you've got to be buying some puts.
Okay.
Because there may be some surprises in that report. Excuse me.
I'll try not to have surprises under Twitter questions, but I got a couple.
Okay.
Roger in Kokomo, Indiana, as we take a look at the March contract that does keep rising up. But Roger's kind of in that same vein. He's asking, new crop carry is almost gone. What is that telling us and why?
Well, it's telling us that there's near-term demand. But historically, we generally see the carry that's there at harvest bleed out of the market over time, and this has been no exception. It's maybe happened quicker than you would expect, but it's not that unusual at all. So right now we've got this demand for the meal, for the beans, and that's pushing the market higher. But when you look at the export market, this is really a meal deal. This isn't a bean demand deal. This is a meal deal pushing these markets higher, and I think it's something you've got to take advantage of.
Okay. All right. Well, we are on beans just a little bit. And Mark, if you do want to get a hold of us on Facebook, we are at IPTV Market. But this question, James in Nebraska, he's at Short Cob 1. That came via Twitter. You can find us at Market to Market. He says, are beans buying acres here in the United States that we don't need?
Well, I would agree we don't need more bean acres. The question is the market buying them with this rally? And again, as we talked about earlier in the show, I think the acreage number is going to be more about the weather than the economics. If we get good weather in the spring, farmers can get in early, get the corn in the ground. They're going to do a good job of planting a lot of corn. If we have any kind of delays, certainly it's going to go right into the beans, and guys will be fine with that decision. But I really don't think we've moved November beans enough in this last 3 or 4 weeks to really get guys excited about planting that many more beans.
That's quite a chart on beans.
Yes,
the way that thing, you know,
yeah.
I kind of tried to get you a little bit. You said maybe another quarter on the show. How much higher do you think that new crop contract? You still stick with that 25 to 30 cent range?
You know, we get up to 1040, 1050 in that range. We're certainly going to get a little more aggressive. Again, when we make cash sales, we're certainly willing to spend some money to re-own it with a call option to keep that upside open. But we still have plenty of crop left to sell if we go higher. For the crop that we're not selling, we're going to roll up puts, keep the puts underneath us. Because if we do have a big crop this year, you know, there's an awful lot of risk out there.
Yeah. All right. Well, there's one guy's wanting to know, and this is another Twitter question. This is Jason. He's asking, why is everything moving but bean oil?
Well, we got an awful lot of bean oil out here. The stocks continue to grow. It's certainly been the weak link in the soybean complex. Guys are buying meal, selling oil, and that continues out here. At some point, when we break the meal for whatever reason, you'll see that oil come up. But it's been a drag on the market. We'd like to see them move in tandem, but bull markets are generally led by the meal. This one is certainly no different, and the oil has been taking it on the chin. But we have increasing oil stocks, and that's been a pressure on this market.
Does the crude oil market or palm oil, those other oils, is that any correlation there to look to for any guidance?
Well, you know, people want to tie the two together, and I guess I see it, but
I take that as a no.
Yeah, I'm not buying soybean oil because crude oil is up $2 a barrel.
Yeah.
I'd be much more likely to buy some corn thinking that ethanol's got more of a chance on the upside than I would on bean oil. But the world seems to perceive it. Years ago, they perceived soybeans and silver moving in the same directions, in the same velocity. And I never bought into that argument either.
You'd sell that argument?
I would.
All right, another question here. This is Craig in Adams, Minnesota. Again, this one's via Facebook. IPTV Market is how you find us there. If the feds decide to raise the interest rates in the months ahead, how big of an impact would that be in the grain markets?
Well, let's start with the premise that I do believe interest rates are going higher. I believe they're going to go higher and faster than most people would think, because that's what interest rates generally do. They move in extremes. And we've seen this long drop down to 0.5%. We've moved it back higher. I believe we're going to have at least 3 rate hikes this year. Everybody's talking about 0.25% each time. I wouldn't be surprised if we see this inflation creep in, like we saw in this report during the week, that they could get a little more aggressive. We've got a new Fed chairman. We'll see how he handles it. But I think things can move faster and higher. How does that affect the agricultural markets? I think long-term it's positive. We get some inflation into this market. People want to buy things. The funds are still looking, where do you put money? If we do get a break in the stock market, can we see some of that market money come into commodity markets? There's been a lot of talk about that over the last few weeks, and I believe that's possible. If you're a fund manager and you're selling something that's been incredibly high, you're going to try to reinvest it in something that's been historically pretty low, and that's relatively the grain markets. So the higher these interest rates go, I think the grains can follow it to some degree.
Well, that's been a question almost every week is, will the money leave equities and come to commodities? Yeah.
I think we're going to see more of that in the next 6 to 9 months. This volatility is crazy. The guys that sold the VIX at 2 and paid phenomenal amounts of money. This was one of these, what they would almost call it an annuity trade. Just keep selling it and cashing the checks. It's like some of these guys that sell options. Well, yeah, that's great, and that's great, and it's great until it isn't. And then you get your socks blown off. And, you know, this is why we don't like to sell options to pay for puts, because these things can bite you, and when they do, it's painful. And I don't know how many billions of dollars were lost on what seemed to be a fairly reliable trade. Just like these guys that tout selling options is fairly reliable. Well, it's fairly reliable until it isn't, and then when it isn't, you really pay the piper.
That almost sounds like one of your famous quotes, Mark, that you wrote this week. Don't ever tell me what a market can't do.
That's exactly right, because a market can and will do anything it wants to, and if you're set the wrong way, you know, this is how you get blown out of these things. This is how farmers lose their farms, by putting on positions and saying, well, a market can't rally or the market can't do this.
Yeah.
Well, a market can and will do whatever it wants to do.
You've hinted around it, and I need to finish on this. Inflation. What does that mean for us commodity-wise? What's that mean for us equity-wise? And the consumer. Why do I need to be watching the inflation mark right now?
Well, I think we've seen in the past couple of weeks, when we get concerns about inflation, the stock market runs and hides. And I believe that over time, as we move these interest rates higher and inflation is coming into these markets, guys are going to be less willing to pay big money for equities at these levels. And that tells me that, you know, there's an awful lot of risk in the stock market. And I think that's ultimately friendly for the commodity markets.
All right, we'll leave it on that. Mark Gold, thank you so very much for coming by. Good to see you again.
Good to see you.
All right, that will do it for this edition of Market Plus. And next week, we begin that new chapter here on the program where Delaney Howell will be here. And the other story we'll talk to you about is we'll examine the race to pinpoint heart-healthy oil seeds. And Dan Huber will be Delaney Howell's first guest here at the Market to Market table. So until then, thanks for watching, listening, or reading. I'm Paul Yeager. Have a great week.